visiting professor at Wits Business School, and I do some part-time work for the Hatfield Motor Group in terms of motoring journalism and some discussions on matters relating to motoring issues.
I'm Christelle Nell, and I'm the General Sales Manager at Cherry Silver Lakes for the Hatfield Motor Group.
We had to talk to Christelle at Cherry today, and I really look forward to this discussion with you. And how's business been?
No, I think the Chinese brands is really growing to a very, very big extent, and we show improved figures month after month, so we're really excited to be part of this journey.
Yeah, how many models do you have at the moment in the Cherry range?
So we've got 4 derivatives. We've got the Tiggo 4, we've got the Tiggo 7 and the Tiggo 8. And then the most popular seller at this stage is the Tiggo 4, which is the entry level, which has a few derivatives, yeah.
Oh, so Tiggo 4 is the most popular, but all of these models have a 1 million kilometer engine guarantee for the first buyer.
Yeah, that's correct.
That really shows confidence in your product.
Yeah, I think that's what sets us apart from the rest. The brand is very positive in the way of selling these cars at a very affordable price, and they also throw in their confidence by giving so much more on service warranty and maintenance plan to back how they feel strong about the product. Yes.
So you have a unique value proposition for your buyers.
Yes.
And tell me, your buyers, I assume many of them need vehicle finance. Talk to me about financing a vehicle.
Yeah, I think in today's life, because of living expenses being so high, not everybody's in the fortunate position to be able to purchase a car cash. But it's not been a luxury in these days anymore. We need to commute, and we need to have a vehicle that we can pay monthly, and we need somebody to assist us with the funds to be able to buy a car.
And tell me, how can a buyer apply for a vehicle finance?
Okay, so there's a lot of banks that grant vehicle loans. I think the most important is to understand what brand you're interested in. You will be in contact with the dealer, and that, I think it's the first option, will be the better one, to reach out to the dealership, which have their finance and insurance business managers that is expertise in the field, and they will assist you and guide you how to apply for a loan, and obviously submit your vehicle finance to the different banks, and they will give you the outcome from there.
So in your view, would you recommend to a client to apply through the dealership or to approach the bank directly?
Out of my years of experience, I think to approach the dealer will be the better option, for they allow to work through different banks, which gives them a bit of a negotiating skill to get you the best possible transaction. Where if a customer has to do it themselves, they have to do the negotiations themselves, and they're going to be in contact with different banks, which is going to be very, very time consuming, especially when you still have a job to do and you need to follow up on their calls. Where the finance and insurance business manager, that is what they do, and they're dedicated to do that in their workspace during the course of the day, and they have time to spend to get you the best possible deal and negotiate the best possible deal.
Okay. And what is the maximum term for vehicle finance at the moment?
Okay, so you have different banks with different terms and conditions, but you can go up to a 96 months period on vehicle finance.
8 years.
Period of 8 years.
That's a very, very long time. But then if you have confidence in your product like you have in a Cherry, the vehicle will last for 8 years, so you can repay it over a long period of time.
Yeah, I think it's a question of affordability. You always have the opportunity to make lump sums of payments, but if you want a manageable installment monthly, it's maybe a good option to give you some affordable installment monthly, but you are more than welcome to make the lump sums, and if all works out quite well, you can pay it off over a much shorter term, but then you're not under pressure that specific months. Maybe you go on holiday in December and you have additional expenses, and then you can only afford the minimum installment, then you still have that fortunate installment to pay. Get back February, March, your finances are stabilized again, you can always pay more, and you can pay it off over a shorter term and save interest.
So do I understand you well, although I take the finance initially over 96 months, 8 years, I can make periodic additional voluntary payments and therefore reduce the total period of repayment.
Yeah, you've actually got more than one choice. You can keep the installment the same and reduce the term by the money that you've paid additional, or you can remain the installment, keep on paying, and then save the interest on the lump sum that you've made a payment.
And typically your clients, the preferred period of repayment, what do you see in your dealership
I think-
when people buy Cherries?
Yeah, I think the 72 months with a 40% residual is a good option. If you can stick within the certain kilometre intervals and you can drive your car for 4 years, I think it's irrelevant which brand you buy. It will be possible for you to get a good enough trading value to be able to settle the car and then purchase a new vehicle. So that is the most popular option at this stage.
You bring me into a question I wanted to ask you about installment or residual payment. You've mentioned that. Just explain to me exactly what that is, please.
Okay, so that's a percentage the customer choose to put aside on the retail value of the car to reduce the monthly installment, and then it will be a once-off payment the last month of the term of the contract. Should the customer keep the car for the period of time, that percentage that you chose will then be refinanced, or you can pay it as a cash amount and pay off the car, or you can trade in the car, and the dealership will then offer you a value for your car, settle the residual, your loan will be cleared, and you can finance a new vehicle.
So in other words, you sell me a 400,000 rand car, let's say I take a 40% residual, means that after the period
That
of repayment, I have a balloon or residual payment of 160,000 rands if I choose 40%
yes,
residual.
yeah, which is a once-off payment.
Yeah.
Yeah, or refinance or trade in, if you keep the car that long.
Yeah. Tell me, and typically your clients, do they prefer a balloon payment, a residual payment, or do they prefer a payment where they pay the car the last amount due in the last month? What do you typically see?
No, I think the trend for residual value is to pay the lower installment, drive the more expensive car, which makes it affordable for you, and to not settle the car, to trade in after a 4 years period and then purchase a new car.
And settle the balloon then through the trade-in of the vehicle that you've driven the last 4 years.
So if after 4 years you come back, the dealership will offer you an amount for the car. We will request the settlement from the bank. The settlement will make provision for all amounts outstanding, inclusive of the residual value. And then what you have been offered is enough. We will settle the car inclusive of that residual. Your account will be cleared and you will be able to
And
refinance
drive
it.
away with a brand
Brand
new
new
Cherry. A brand new
A
Cherry.
brand new Cherry, yes.
And then tell me, is a deposit required when a person finances the purchasing of a new vehicle?
So any customer is allowed to apply without a deposit, but you can also choose to give a deposit. It also depends on your affordability. So you will maybe apply without a deposit, but depending on your affordability, the bank can come back with a counter offer and suggest that the customer need to add some deposit to make the installment affordable to grant the loan. But you are allowed to apply without a deposit.
Yeah, you make it one point that I should really explore with you, namely affordability. So is affordability relative to your income?
Yeah, for
So,
sure.
so you measure the affordability relative to the customer's income.
Yeah. So in South Africa, affordability is calculated between 25 and 30% of your annual income. So, and the minimum that you need to earn to apply for finance is 6,500 rand. So whatever you choose to buy, the installment need to be between 25 and 30% of your monthly income, but your disposable income also need to qualify. That is your net salary after all expenses has been paid. Then also need to qualify for the amount that's left. We call that disposable income.
So you have gross income, so the payment between 25 and 30% of call it gross income.
Yeah.
That's before tax, before pension contributions, before medical aid contributions. And
That's
the gross
correct.
left is called disposable income, but
correct.
then you use that as a second measure.
Yes.
And of course, when we talk about vehicle financing, different people pay different interest rates. So let's start with a fixed versus a linked interest rate. Just explain to us the difference.
Okay, so we must understand that you qualify as per your credit rating on how the bank will grant your loan. With deposit, without deposit, it depends on the term, it depends on the residual value, and then the bank will obviously also calculate what will be the interest they're going to earn over a period of time to make it financially viable, and obviously taking your credit rating in consideration, and they will then give you an offer on this is what we will offer you variable, this is what you will be offered fixed. Referring to variable, it can adjust as the repo rate adjusts. So if the repo rate is increased, your interest will increase accordingly,
And then your payment will increase.
and your payment will increase. If it decreases, your installment will decrease with a repo rate decreasing number. If it's fixed, it means it will remain the exact same percentage as from the first day that you purchased the car, irrelevant if the repo rate will increase or decrease. So it will remain the same percentage right through the contract term.
Typically, in the industry terms, would a linked rate or a fixed rate to start off be higher?
Under normal circumstances, I think 90-95% of the time, your fixed rate will always be the higher interest rate between the two.
Okay. So there is some attractiveness at the outset to go for a linked rate, because your payment might be slightly lower every month.
Yeah, which is true. I think it depends where we are in the market at that stage. Customers think that when the rate increases drastically over a period of time, that they will normally request for the fixed rate. Where the rate is very low at a certain period of time, they will choose to do the variable interest rate. So that all depends where the market finds themselves, and I think the customer also decide what chance they want to take. Do they have a bit of leverage on what they're going to pay? Should there be an increase? If you feel that you are really maxed out at the time that you purchase the car, they tend normally to choose the fixed rate to not be caught off guard with an increased installment.
That makes sense, yes. So, and then, of course, the rate will reflect risk. I believe it's linked to the prime rate.
Yeah.
You get prime plus 1 and
Yes.
prime plus 2 and prime minus 1. And now, who decides whether you are at prime, prime plus 1, prime plus 2, prime minus 1, prime minus 2? Is it the bank that rates your credit score and then decides what to offer you around prime?
Yes. So you've got different banks with a different approach. So when we normally do finance, we don't make use of one institution. At this stage, we use Westbank and Absa and Standard Bank and Nedbank, which is also MFC. And when you apply, obviously your credit rating will play a very big role on what you have within that typical bank industry. And they will all come back with a counter offer on what they will give you linked or fixed. So that's normally where the discussion comes in, with their certain terms and conditions, what we can offer you with the different banks. So the bank makes that decision, yes.
So this is a case where prime plus 1 is better than prime plus 2.
Yeah, because it's lower.
Because prime plus 1 is lower
Yeah.
than prime plus 2.
Yeah.
Tell me your expectations for the year going forward. How do you see the economy in terms of car sales developing? Do you see an uptick already in new vehicle sales, or how do you see us going forward?
Yeah, if I look over the last 3 months, I feel that maybe there was still a bit of hesitance, but I can suddenly see that there is a bit of change, and now that there wasn't a rate increase, I think it was twice now the last 3 or 4 months, I think there's a bit of confidence in the market, and I think people start to feel more comfortable, maybe to spend a little bit more money. I think there will be a drastic growth in car sales, and people that maybe want to enter the market again after this unsure times that we had this last few years. So yeah, I'm very positive about the sales.
It was really very nice to talk to you, Christel, and good luck with your endeavours. I hope that you will sell many vehicles, and I am sure that your customers will be very happy, both with the experience when they purchase the vehicle and also the aftercare service that you render. Thank you.
Thank you for the opportunity. Thank you very much.